Hey everybody, today we're going to go through the six ARK ETFs with portfolio manager Cathie Wood, one of the most popular investment managers in the game today. Before we do, please click subscribe to my channel if you don't already, and please check out the message you see on your screen from the Motley Fool, where you can get the top 10 stocks to buy right now. So before we get started talking about the individual ETFs, just a couple of quick housekeeping notes. Number one, remember that these are actively managed ETFs. Most ETFs are passive index funds. They're designed to match a benchmark's performance over time, like the S&P 500. These are designed to beat the market over time. That's kind of the goal of actively managed mutual funds and ETFs like these. So the downside is that they can and have in the past underperformed the market. Most of the Cathie Wood ETFs have underperformed the market in the recent downturn. And the reason is these are full of mostly high volatility, innovative growth companies that tend to do really, really well when conditions go well, or tend to do really, really poorly when they don't. So keep that in mind. And number two, like any actively managed investment vehicle, all six of the ARK ETFs have above average fees or expense ratios, as they're known. Now, I wouldn't call them expensive. All but one have a 0.75% or three quarters of percentage point expense ratio, which the historical average for an actively managed fund is about 1%. But this is still significantly higher than the 0.1% or less you'll pay with a lot of index funds. So you are paying portfolio managers to pick investments for you, and that comes with a cost. So without further ado, let's get into the six ETFs and the differences between each one. So we're going to go in order from the largest to the smallest in terms of the total assets they have under management. The flagship ARK ETF is called the ARK Innovation ETF. Ticker symbol is ARKK. It's got just under $8 billion of assets under management as of the latest information. Like I mentioned earlier, most of these have an expense ratio of 0.75%, and this is one of them. And the objective is a pretty broad one, to invest in companies engaged in disruptive innovation. So, in other words, growth companies that are inventing the next big things. There are a total of 31 stocks in the portfolio, and that's one thing to take note of, because in all of the ARK ETFs, they have significantly fewer stocks than most index funds do. I mean, an S&P 500 index fund obviously has 500 stocks. The Nasdaq 100 ETF would have 100 stocks. Most have more stocks than these ARK ETFs, so they're very top heavy. They tend to be very reliant on just a handful of stocks. So for that reason, I've listed the top holdings for each of the funds. The ARK Innovation ETF, as I mentioned, is 31 stocks. Top holdings are Tesla, Roku, Zoom, UiPath, and Block, formerly known as Square. Second is the ARK Genomic Revolution ETF. ARKG is the ticker symbol, ARKG. Just under $2 billion in total assets under management, 0.75% expense ratio, and as the name implies, their objective is to identify companies that are focused on developments and advancements in the field of genomics. So this one has 45 stocks altogether. A few of the top holdings there you might recognize. But if you are like me and don't understand the genomics industry at all, this could be a good one for you. I generally like to use ETFs primarily in my portfolio as a replacement for exposure to industries that I want to invest in, but aren't really in my core circle of competence. I consider myself very good at analyzing real estate and financial sector stocks, decent at overall technology, but healthcare and especially biotech is not in my wheelhouse. So that's what I use this particular ETF, would use this particular ETF for. Number three is the ARK Next Generation Internet ETF. ARKW is the ticker symbol. $1.3 billion approximately of assets under management. It's the highest expense ratio of the six at 0.88. And this is cloud stocks, online payment stocks, big data companies, Internet of Things companies, 32 stocks in all. Just like the ARK Innovation ETF, Tesla is the number one holding. It also has a significant concentration in Roku, Block, Coinbase, and Zoom. You'll notice between a few of the non-specific, like the genomics ETF, the ones that are just kind of investing in these big tech trends, you'll see significant overlap between them. So number four is the ARK Autonomous Tech and Robotics ETF. ARKQ is the ticker symbol there. About $950 million worth of assets. as of the latest information, 0.75% expense ratio. This is where you'll find a lot of AI stocks. You'll find stocks focused on manufacturing automation. Autonomous vehicles is the obvious one, which is why Tesla is, again, the number one holding in this one. But you'll see a few other companies on there that you may or may not recognize that invest in or are trying to develop the latest in autonomous technology. So if you want to invest in AI or robotics and don't really know where to start, this could be a good one to go if you don't want to go the traditional index fund route. Number 5 is one of my favorites because it's an industry I understand, fintechs. Financial technology or fintech, the ARK Fintech Innovation ETF, ticker symbol ARKF. One of the smaller ones is at $836 million of assets, 0.75% expense ratio. The objective is to find the leading disruptors in financial technology. Only 28 stocks in this one, the smallest by number of any of the ARK funds. Shopify is the number one holding, which shouldn't be a big surprise to anyone, one of the largest financial technology companies in the world. Also has large holdings in Block, formerly known as Square, Coinbase, DraftKings, which might come as a surprise being that it's financial technology, but they are on the forefront of a lot of payment technologies with DraftKings, and UiPath. So, last but certainly not least, the smallest of the 6, the ARK Space Exploration and Innovation ETF, ARKX. $281 million in total assets, 0.75% expense ratio. And as ARK puts it, the objective is to invest in companies whose business focuses, quote, beyond the surface of the earth. 35 total stocks. If you are like me and don't understand the space economy at all, this could be a good one for you. Very few companies on the list that I am familiar with. You can see the top 5 holdings right there. And hopefully you found this to be a nice primer on the Cathie Wood ETFs. I'd love to hear if you actually invest in any of them or if you wouldn't touch any of them at all. I'd like to hear that too. Please leave me any comments. I'll do my best to respond to any of them individually. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 428% as of 5/22/2023 and are measured against the S&P 500 returns of 122% as of 5/22/2023. Again, that link is fool.com/Frankel. Please check it out. Thank you for listening.